Hello and welcome to today's Elliott Wave Traders Classroom video episode. This is Favio, and in today's lesson, I want to perform a wave counting exercise on this issue. Actually, this is a currency pair, Euro Sterling, and I just want to apply everything we know regarding the wave principle together, try to identify a core pattern, and put the labels on and try to figure out what is the path that this market is currently taking from the swing high up here at 0.8864 down to today's price action. So before we begin putting the labels on any given chart, you need to make sure you have a macro view, you know where you stand. With a higher time frame analysis, Elliott wave analysis, before you go in more granular details, such as putting labels on the hourly, daily, hourly, or even minute time frames. If you don't have the macro view, then you should stop labeling short-term time frame charts. So in this market, I have a medium-term bearish view. I'm modeling some sort of triangle here on the weekly, on the monthly, within a even higher degree time frame correction. So overall, I'm looking at Euro Sterling in a correction manner. So we're consolidating lower, and once we finish off with this consolidation, we're going to set the stage for higher prices. But we're not done yet with the downward correction yet. So this market overall in the higher degree time frame is simply consolidating in a corrective manner before we see a violent reversal or the resumption of the uptrend. So that's my medium term, let's say, bearish thesis, but within a higher degree, a secular bullish structure. So going now to the daily, on the weekly, I'm looking down in wave E. So we know that wave E usually sports a zigzag type of a correction. Could be a simple or a multiple. And in rare instances, we observe a triangle within wave E of a triangle in itself. So that's a valid pattern, but we should keep that in mind that it's a low probability scenario. Even though it's a very valid pattern, it's just we don't see them occurring frequently. So I'm gonna go and stick with the simplest interpretation for wave E. So just to keep the reference here on the daily as well, I have wave D up here, and we're working our way lower in the zigzag, some sort of zigzag, which we don't know yet, but we are going to try now to label together. If you want to practice your skills, you can pause the video and try to label the current move from the swing high that you see labeled to the most recent price at 85.18. This doesn't matter, it's a currency pair, anyhow, it could be whatever market. And how do you come or how do you analyze this consolidation here or the overlapping price action? Because we have an overlapping price action. If you are labeling this as 1, 2, 3, 4, and 5 as an impulse, you're breaking one of the Elliott Wave major rules. Wave 4 cannot end at the price territory of wave 1. We've got overlap, so that is dismissed. So how do we go about and label that? I think, to me, that's a leading diagonal, wave A. Since I'm working with a zigzag for this E position of the triangle, then I want to have an A wave. Keep it simple first. This could turn into a complex correction, but we don't know that yet. So our goal is to go with the simplest wave patterns. And in a correction, the simplest pattern is the simple zigzag. In a motive structure, the simplest path is an impulsive way. So we don't just go and shoot with a leading diagonal right away. We give the market a chance to prove itself that it is able to build an impulse. If it's not able to build an impulse, if we got overlap, then definitely we will resort to the leading diagonal. And the market told us somewhere here when we overlap, we had 1, 2, and we were giving the third wave of an impulse a chance, but the market failed, 3-wave decline, and then 3-wave up overlap, and again 3-wave decline. So that's a series of 3 waves in 5 subwaves in total, and in an overlapping but diverging manner. So this is an expanding leading diagonal, and wave A done. And at that point, maybe when you could have labeled this all as wave B up there. However, B waves take time. They are not that sharp. Whenever you catch yourself labeling a B wave this sharp and completed up here, all of it, I think that could later on come and bite you, because the price action has not, it may, the structure may have retraced enough in price, but not uh, ample enough time has been corrected for the B wave. So we need to keep that. It's a characteristic, it's a feature of B waves. They have that personality that they tend to take time, and they are not just as simple as we see here. So going forward in time, we could have labeled this as a completed B wave, considering the sharp decline, and the subsequent price action was that sharp that I, even at that time, I remember I was counting this. I just wanted to give the bears the benefit of the doubt, and I was counting it as 1, 2. But when the market, so after I did, I labeled as such, I established this AC channel. So I was expecting the remainder of the price action to unfold below the upper boundary of this channel. And then you can establish another one. You think that wave 2 has completed, you can go ahead and try to label, try to establish base channel, we call it, the channel that connects the extreme of wave 2 and 1, and under the premises of such a channel, we would want to see third wave price action way below the lower boundary of the channel. Anything above the upper boundary will be an indication that this wave 2 is still underway, or wave B on its own has morphed into a larger correction. So at that point, even if you are not using the channeling guideline to assist you with the wave development in real time, it's very important. At least for me, I can't apply the wave principle without channeling. I can't take trades without having the channels on the charts. Higher degree channels, quite important, but definitely I need to have the channels on the shorter time frame chart as well. They are not rules, they are simply guidelines of wave formation in real time, and they are simply helping us shuffling through possible paths a market can take, and increasing or lowering the probability of each of such a pattern. So if we can continue and label this as 1 and 2, another 1 and 2, we would be probably breaking some Elliott wave rules here, because the price action at this leg looks quite corrective to me, and then the market pierced above these green channels upper bunch. At that point, I went in and favored that we are not in a 1-2 1-2. I'm gonna go ahead and favor that wave B has morphed into a triangle, so I'm more comfortable allowing this market to take its time to consolidate in this B wave position, so later on it can drop properly in wave C. So I went and favored that we have a wave B, potentially triangle. So how do we label the internals of the wave B? So this sharp rally, the first leg was the A wave of this B wave triangle. We've got the B of B here. It tricked us into thinking that this decline was an impulse. However, apparently it turns out to have been a sharp multiple zigzag, and we have wave C of the triangle, and wave D and E. So the triangle looks complete right here, and wave E. We're gonna draw the lines of this triangle as well. So it's a contracting triangle actually, where wave E overshoot the AC trend line. Now, whenever you see that event occurring in real time, it has happened to me that if I have a position here, a short position, then it's coming so close, it's overshooting the AC trend line, and you have the tendency to panic, and you say that, well, what's the point? The market broke above the AC trend line. I would rather take whatever loss I have right now than be stopped out above the high of this wave C. So um, the invalidation of the triangle definitely would have occurred above the high of wave A, but at that point in time, the market was thrusting higher above the AC trend line. But you should know that that's not an invalidation moment. Actually, overshooting or undershooting AC trend line is actually a sign that this market is in its very late stages of completing the pattern. Maybe a couple of hours will separate us from seeing the remainder of the pattern. So, and it actually took maybe 1 day or 2 days, and the sellers reacted aggressively. So we saw the reversal there, and as you see, we gap lower in Forex. I don't know why the broker here still has the gap, but we got an overnight sell-off immediately. And there you have it. Now it's becoming quite evident, quite clear that we are thrusting down in C wave from 87.41. So you can adjust now the corrective channel. So you can connect now the extreme of wave B with, take the parallel with extreme of wave A, and you will have an idea where to expect wave C to terminate. Not necessarily to need to end there, but it's just a first clue. Another thing that you do is definitely you apply Fibonacci ratios, a wave relationship, Fibonacci wave relationship. So the equality projection between wave C and A comes in at 84.75. So that's our actually first target. It coincides with the lower boundary of this corrective channel. And what else? Now we need to label the internals of wave C. We know that the C waves are 5-wave structured in an ABC structure. We need wave C to unfold and subdivide into 5 subwaves on its own. And we have here clearly 3 waves currently. Wave 1, wave 2 was a time-consuming correction. So we would expect as a proportional correction in wave 4, either in price or in time. Alternation as well is required as a guideline. But overall, we are still developing this green wave 3, and we can reduce or lower our daily key level, let's say line in the sand, to 0.8615. Let's round it up. And when green wave 3 completes, we'll want now a corrective rebound. Some proportionality between 4 and 2 is required. So since wave 2 looks like a flat, then I would look for a zigzag correction in wave 4. But I don't have evidence yet that wave 3 has ended yet. So in third wave forecasts, I have a major rule. I don't step in front of it, and I don't want to pick the bottom in this case or the top if it's a third wave to the upside. So I'm willing to let the market bottom in itself in this third wave, and if we get a large enough correction, then I will have indication from the near-term price action on the 4-hour that this wave 3 has ended and wave 4 is underway. But this is what I am expecting for the rest of the structure to develop. Ideally, we want wave 3 to continue to unfold, proportional reaction in wave 4 relative to wave 2. We don't want overlap with 86.14.8, and then the market will continue lower again. So if you want to move forward and put some labels for this green wave 3, we can do that quickly. So this is green 2 on the 4-hour. Let me push this to the right a little bit. So that's our ABC wave 2, and here we have the internals of wave green 3. So we're gonna go with purple for the subwaves of 3, 1, 2, and it looks like we have wave 3 again. So I'm counting that on the Currency Pro service, intraday service. Actually, we are still looking lower in euro sterling near term. There is no evidence yet that this wave 3 has ended. I'm counting here as well, 1, 2, 3, 4. So maybe we can go a bit one degree lower. So I'm counting that as a second wave here, a third wave, a third of a third. We should be aware that third of a thirds are quite steep, and they tend to extend farther than we can think of. So we don't want to be in front of trying to stop a third wave development. That doesn't make sense. We should ride it. So that's what I have right now. Consolidation, finishing off this wave 4, done. Triangle, and once it's done, we need to make lower lows again. I have some Fibonacci pivot points and extensions here. They have no strong meaning actually, but I use the 1618 of the monthly pivot. So whenever market breakout, I look for the equality and the 1618. Those are like important short-term swing points that the market can bounce off of. And as you see, I can't delete from this indicator the others, but the equality in 1618 can provide some relief rallies, but definitely they don't help you if you are trying to make a big calls when it comes to the bottom of the entire structure. But if you are short-term scalping it, it's definitely something that you can try to research a bit more. So we go to relief bounce, and then we continue. When we broke below, then it's clear that the market is trying to go and test the other Fib extension level of the monthly pivot, which is up here, and that gives us 1618. And I think it will coincide with the completion of wave 3 in purple. So overall, this is how we put everything together, and we start with a macro view. We think of the simplest form path the market can take, and then we let the price action tell us what's happening, as we did here. Now we know that each wave has its own personality. Be aware when you count sharp B waves as complete entirely. B wave may have completed its first leg or registered the high there, but that doesn't mean that it's all of wave B. And use channeling, use Fibonacci wave relationships, and I think with enough screen time and applying everything together, it becomes easier to apply the wave principle, not only in hindsight, but even in real time. We hope you enjoyed this free lesson. If you're looking for more for a limited time, you can try our Traders Classroom for 30 days for just $30. That's 69% off the standard monthly price. With Traders Classroom, you get 3 new lessons every week, a live webinar each month, access to an extensive lesson archive, and more. Go to elliottwave.com/30YT or click the link below.